is a recovery even possible at this stage, or are we for sure going to be heading down? I'm going to be answering that with you guys in today's video. But the first thing that we need to touch on, which is actually really, really important at this stage in this market, is that we've developed brand new resistance. We've never had resistance here before, as far as I can remember, and it is right here at the 26.2, 26.3 level, and this is happening as a result of dumping down and now basically just catching a ceiling. See, we fell down here, never really had any issues around here, but right now we are definitely encountering a little bit of resistance, and we know that because Bitcoin hasn't been able to, with any real breakout, been able to get above this kind of horizontal area. Again, let's just keep a line right here. You know, we haven't been able to get above this area since we fell below it, and that does now mean that it's been a whole 3 days and even a little bit more. So the good news, and this is really good news about things like this, is that when you establish resistance areas like this, you actually, like, the ceiling that you need to break in order to be bullish again gets lower. Okay, and that's something that, like, I don't know if you guys remember. Let me know in the comments if you were here back then. Just say I was here. I love hearing it from you guys. Way back, like December, November of last year, I was talking to you guys about how when you've got these areas of resistance and you keep dropping in price, what actually happens is that the point that you have to break in order to be bullish again keeps getting lower and lower and lower, which means that our lives get easier, right? Like, it's a little, you know, it gets easier to bounce the more you drop. It's just one of the concepts in trading that, honestly, like, you don't even really learn this in books, surprisingly. Obviously I talk about it in the stuff that I put forward with you guys, but you know, it's just one of those things that you pick up as time goes on, right? I'm going to give you another example, because I really want you to be crystal clear on this, because this is going to help you for the rest of your life as a trader. When you drop, put it this way, yeah, when we're up here at $69,000, in order to get bullish again after this drop, you need to get up above this high, right? Like, if you drop down here, you now need to clear basically this high to be bullish again. But what happens when you drop down here? Well, when you drop down here, you're only, and obviously we don't, you know, the chart hasn't played back this far, right? So the, like, now the key level to break, you know, in order to be bullish again, is going to be this prior high. Once you break this prior high, you're back in the game, right? We can keep playing this back, honestly. Like, this can get as ridiculous as you want it to. Back here, the key level to break wasn't any longer $69,000. It was actually the prior swing high. You know, so when we drop down here, the key level to watch is this one. If and when we get above this one, we're back in the game. So this is an important thing to keep in mind. These targets keep on moving the more that the price action develops. And what we've done now, as a result of finding resistance at 26k, at 26.2, 26.3, is we have now brought that ceiling even lower. We have made it even easier to get that breakout. Now, does it mean we're going to get the breakout? Absolutely not. But I don't think that the situation is looking as bad as people think it is. I've been saying this since we dropped down here. Yes, absolutely, it still looks super clear that we can drop lower, and I will get to that, so bear with me. Smash up the likes if you are excited for it. But what I want to talk to you about right now is the fact that this is a new area of importance on the chart. We'll talk about the downside in just a sec, like I said, so just give me a minute there. You know, and so what this means is that if we are able to get above this 26.2, 26.3k area, we have had some interactions here, to be fair. Definitely, you know, was a level that's been important since May. You know, if we are able to get above it, then, you know, we can potentially get the next pump up to the next level, which is at 26.7. It is very close. It's literally only 2% away, so it's almost negligible. You know, for me, I would lump this all as being the same area, which, you know, for me means that if we're able to overcome this kind of general block of resistance, you know, then it's probably going to be this next area that becomes challenging, somewhere around, let's say, 27.7, maybe even up to 28.5, because that's been one of our critical bounce and rejection areas on this chart right here. So you know, it is going to be one of those areas that I'm going to be keeping an eye out for as well. And one of the reasons that I think it's important to keep this in mind is that if we do start to recover some of these levels, you know, I think a lot of the people that are now in the bearish camp are going to, you know, stay quite sure-footed there. They're going to be quite firm in being bearish now, because, you know, when you see the market just crash right in front of you and you've been bullish for months, you're going to have a little bit of a sour taste in your mouth. We definitely are not seeing this with Binance Retail, by the way. Binance Retail is killing us right now, you know, being majority long, and we will get to that in just a moment as well. You know, but if we do start to move up and there's just still this massive disbelief sentiment in the space, then we're doing the right thing. So that is something to keep in mind. Now, obviously, I've been saying this for a very long time. I do feel like these markets are just going to be at the mercy of, you know, traditional finance. The S&P 500 is actually finding a bounce after all of this blood that it's experienced over the last 3 weeks. I know it's only down by 6%. It's really not that big of a deal for people like you and I, but you know, this is a big deal for the biggest, or one of the biggest indices in the United States, which is of course the biggest economy in the world. So, you know, to see something like this is definitely a big deal in my opinion. And what I think it's going to mean is, you know, just quite simply that, you know, I mean, look, I see this as a bit of a dead cat bounce, you know, something a little bit like this. I still think that the S&P 500 is probably going to be taking a little bit of a dive down. And, you know, one of the reasons I'm saying that is if you just kind of look at this chart, like, you know, this area that we bounced off from just isn't really a bounce zone. It's close to a bounce zone, but it's not one of them. Now, granted, you know, Monday starting strong like this is something I like, and you know, bulls are going to be quite excited by that. The fact that you start off a Monday after a big sell-off, and now you're starting to kind of recover a little bit of that is definitely promising. But you know, I mean, for me, at best, you know, I think that we are, you know, maybe looking at something like this over the course of this week if we're going to stay bullish for the whole week, and then you know, probably just continue down, because this has been a stellar rally for the S&P 500. You know, we've been calling it, and you can trade it obviously on bingx as well, which is linked in the description down below, available for you to check out. Let me just see if I can, like, sometimes they show, sometimes they don't. Yeah, you can trade stocks, you can trade indices, forex, commodities, fucking anything you like with Bitcoin, with leverage, without KYC. It's a crazy fucking offer that these guys are giving you guys right now. So definitely do check it out if you are interested by following these links in the description down below. They're currently giving you over $100,000 in bonuses, which is fucking crazy. So definitely do check that out if you think you'd be interested in it, because you can trade this. And you know, we were talking about how, you know, bullish I was in the S&P 500 for an incredibly long period of time. We topped out at exactly where I was expecting resistance, and now, you know, I just think because it's been such a strong rally where, you know, realistically the last real correction that the S&P 500 had was a 37-day downtrend over here, which took us down by about 9%. So we're now starting to see things that are on a similar kind of magnitude, right? We didn't really get any pullbacks after that. This was more of a time-based correction. You guys already know the deal, right? Sometimes you get time-based corrections where the price trades sideways, and other times you get price-based corrections where the price ends up dropping down. So, you know, this was one of those instances with the S&P 500 where we quite clearly got a time-based correction, but not a price-based correction. You know, and so I think that we are due for that now. And again, you already know the deal, how this would kind of impact the wider crypto markets. We've also discussed this at length, which is, you know, fairly straightforward, that if traditional finance is doing well, then, you know, people are going to be inclined to take a little bit more risk and put their money into risky assets like Bitcoin. We are, just due to the nature of the world, you know, the reality is that we are at the mercy of traditional finance markets. It's been that way for an incredibly long period of time. And, you know, given that, I just don't really see this little, you know, kind of spike sticking for the S&P 500. I am going to have to expect that things might lean a little bit more to the downside. So let's go ahead and discuss that now and talk about those possibilities. You know, again, this resistance, you know, if we do break it, you know, we've got to break the next one too. And then, you know, and this is the kind of the problem that Bitcoin has now, is we have just kind of, I mean, you know, there's so much resistance up ahead, given how much we've dropped. Like, we're definitely not out of the game, and you know, this is something I've made very clear to you guys. We haven't broken our structure of higher lows, and you know, this is before we even have a discussion about Bitcoin pulling deviations, you know, which is really important. You know, I talk to you guys about how important higher lows are all the time, but you know, one of the things that I haven't discussed with you for a while is deviations. And you know, what's interesting is if we actually just go ahead and replay this chart back to like right here, we had the same situation of higher lows in this market, right? Here's a low, here's a low, here's another one, and here's a higher low, right? So absolutely fantastic, everything is going to plan. But then, you know, Bitcoin kind of just plummets below that low right here, and what ends up happening next is, you know, it kind of looks like all hope is lost. You know, it looks like, okay, well, now here we've lost our previous higher low, we've punched in a lower low, the uptrend is over, right? That's what you would be led to believe. But of course, if you're like your boy right here, that's actually where I'm entering a long position, you know, which you guys have been so aware of over time. You can see that I entered at 21.5, which was literally right around over like here, actually a little bit higher over here. But I did it on the bounce back up, so around over here, you know, and that's because like I was able to see through this. I was able to see that actually, you know, Bitcoin's love language is deviations, and so, you know, even though we're looking for the structure of higher lows, you know, we have to be open to the idea of a deviation, you know, and we shouldn't be surprised by it. That's kind of the main thing is, you know, because they're so common now, you are making a mistake if you're caught off guard by them, and you will be if you think that, you know, losing this low is the end of the game for Bitcoin. You know, for me, it's just, look, I understand why you'd be cautious of the market at this stage, but, you know, for me, it's just, it really is just a simple case of stepping the fuck back, you know, catching my breath a little bit, and being like, all right, even if we drop down to 20k, like, where does that actually put us? Like, if you throw a Fibonacci on this chart, you know, where does this actually put us realistically for Bitcoin? You know, where have we dropped to in the past? You know, I've actually hidden most of my Fibonacci levels here, but I mean, this is still a really good example. 21.3 up to 22, you know, is the Fibonacci golden pocket, and this is a particularly interesting one because it's a super obvious place for Bitcoin to bottom out at, and it also lines up with, you know, probably the key area on this chart. You know, it is, you know, that there's a good reason I entered my long position precisely at this area. You know, it is a very psychologically charged, technically charged level on this chart, and this is exactly where the golden pocket is. You know, and one of the points that I want you to consider is, you know, within a healthy uptrend for Bitcoin, sometimes, a lot of the time actually, it has extremely deep, painful corrections, and that's just how Bitcoin is. That's why we love it. That's why we can make a lot of money off it when the price goes up and when the price goes down. And again, you already know the deal. You know, it's super important to be trading these markets in safe, reliable places that have proven themselves over time, and that's why I am very particular about the exchanges that I use. And if you want to check them out, you can follow these links in the description. Bybit is undoubtedly the best in the game, in my opinion. I've been working with them for many years, and my opinion has been the same since even before I started to work with them, because they have a great product and they're giving you up to $30,000 in free trading capital for you to check it out so that you can actually trade on it and you can make money on it. You get free money actually that you can trade with right here. So you know, any profits you generate with that are yours to keep. It's a really, really good offer. Definitely do check it out if you are interested. And like I said, BingX, combination of no KYC and, you know, all the other markets that you can trade with. Even if you don't care about the KYC thing, just having all the other markets to trade makes it a fucking killer offer. So definitely do go ahead and check that out for over $100,000 in bonuses too. You know, this golden pocket sits right here, and it's about being realistic and just remembering, like, you know, Bitcoin within uptrends does generally have very deep corrections, and you know, it would just be very much in line with Bitcoin's character, and that's not something which I think a lot of you guys, or really just the wider crypto market, not even necessarily you guys, it's not something that I think the wider crypto market is able to accept and understand. You know, for us, it's got to be a staircase to heaven at 45-degree angle or better, or bust, you know, and obviously that's just not how the real world works for Bitcoin. So, you know, that's something which I think is really important. You know, yes, yeah, sure, short-term analysis isn't looking particularly great right now. Obviously, in the short term, we've dropped down, so that's naturally how it's going to look. But you know, we're still in an incredibly strong position, and it's just too early to write off all these gains, in my opinion. I mean, you know, we've already had a long drawn out bear market, this fucking you know, crazy recession where the whole world crashes and everyone dies and the dollar collapses, this fantasy that, you know, what's the word, pessimists have had for years, you know, just still hasn't come true, and it very well might, and they have good reasons for believing what they believe, but, you know, it hasn't happened yet. And at what point are you going to be like, all right, well, I'm tired of sitting on the fucking sidelines. Bitcoin has just doubled off its low within, like, you know, whatever, 7 months. You know, let's be realistic here. Like, maybe there is some money to be made in this market. You know, that's the bottom line as far as I'm concerned. So let's move on and talk a little bit more about this. If we look at the Ichimoku cloud, we have now closed this green cloud up, and it is turning into resistance for mid-September, starting around the 16th, 17th of September here. And if we do look at this on a smaller time frame, like the 4-hour, now we're really starting to see some problems develop for Bitcoin. You see, if Bitcoin is able to punch above, and one of the things that happens when you're in a downtrend, especially when you've just recently restarted that downtrend, is that you know, your resistance is going to catch up with you eventually. You know, you don't, you know, this is the thing I was talking to you about in the previous video about, you know, this using this horrible analogy of FBI hostage negotiations, where if you don't get the hostage back in the first 72 hours, what, you know, people in the FBI typically say is, if you don't get them back in the first 72 hours, you're not going to get them back. You know, that it just, the likelihood of getting them back drops down massively. And I was making the point that it's similar in these markets. You know, if you drop down but you recover it quickly, you're okay. You know, and there are exceptions, by the way. This was a little bit of an exception, but at the same time, not really an exception. You could see that we dropped down, and then pretty much the next day we were back up. This is much more obvious on some other drops. You know, here's another drop where it was very obvious. You know, the absolute low of like basically every fucking market always looks like this, where, you know, like you drop down, yes, but your recovery is really quick. You know, basically within the same day, within the next day, but very, very quickly. You know, and if you kind of fumble the bag and you're not really able to pull that off, then you end up in a situation a little bit more like this. And what that does is it actually allows the resistance a chance to develop. You know, if you don't seize those first 24, 48, 72 hours, whatever you think that number is, if you don't seize that time and you don't actually use it to send the price back up, then you know, you're actually, you know, and this is where this analogy comes to life, and we can see it in front of us. You're now actually having a chance to face some resistance, which is you know, definitely where this is all going to get a lot worse, I think. So resistance here starting towards the end of this month here in August on the Ichimoku cloud on the 4-hour time frame, but the EMA ribbon on the same time frame is already here, you know, and this is a great display of momentum. You know, and it really is quite bearish momentum right now, and it stretches all the way up from basically, you know, our resistance level at 26.3 all the way up to 27.3. So for about $1,000 now, you know, this is quite heavy resistance for Bitcoin to be facing. And on the hourly time frame, we've already been facing it. In fact, you could make an argument that that's the reason we haven't been able to punch up yet. So you know, this resistance is getting weaker. You know, we've been testing this resistance a lot. We've been testing this ceiling a lot. So, you know, the likelihood of a breakout to me isn't, you know, super low. I definitely think that that's possible right now. You know, but again, if we break out, like, are we just going to break out to capture more resistance? Because that's definitely how it's starting to look right now. So, you know, that's kind of the upside covered. To the downside, you know, one point that I do want to make, which, you know, again, is just kind of being completely glossed over by everybody, is that you know, like we only kind of partially hit this area. I mean, we didn't even quite get down to 25k, which tells me that a lot of people were front running the market. Obviously, we know a lot of people are going to be interested in buying at 25, so naturally a lot of other people were like, all right, well, I know that fucking everyone wants to buy at 25, so I'm going to buy at 25.1. And then the next dude's like, well, I know everyone's thinking like that, so I'm going to buy at 25.2. That's how front running happens, and that's what happened here, where we didn't actually bottom out at 25. We bottomed out a little bit higher than that. So, you know, that tells me that there were, you know, quite a few kind of excited buyers ready to step in at this level. And so we didn't quite get down to this area of support. We haven't fully tested it yet. Yeah, it probably does count, to be fair. I'm not going to be like, you know, I'm not really going to try and like bend things around. I'm sure, you know, you could say that this does actually count as a real test of support. But, you know, I'm just not sure if this support area is going to cave so easily. You know, one of the things I want to make clear to you guys is that when we first used this area of resistance last year, you know, we didn't hit this area again for a whole 6 months, and it was still resistance, and you know, at that it triggered a 20% drop within 3 weeks, which is, you know, fairly large for Bitcoin. So, you know, it's definitely an important level as resistance. You know, it's clearly an important level as support. You know, even if it just happens like last time, we'd probably see something like this, you know, which you know, just in and of itself would be good. You know, at least to get some sort of bounce. It would also form a head and shoulders pattern, which I know that you already paused the video to tell me about. So shout out to those of you that are kind of jumping ahead and thinking fast. I do love that very, very much. You know, so losing this area of support, I don't know if we're there yet. I still feel like we've got at least another 1 or 2 tests until we are actually going to plunge below this area. And then, you know, when we do, it's just a case of, yeah, like, you know, the next areas of support are going to be like 23 point whatever, you know, 23.7, you know, 21.5. We've covered all of this stuff before, and that's basically more or less what I'm probably looking at in this market if we do end up dropping below this area of support. But as it stands right now, we're just trading sideways. We're in a bit of a continuation pattern. You know, on the short-term time frame, it looks like we're going to do this. On the larger time frames, it looks like we're going to do this. You know, which is something that we've already discussed. And, you know, I'm kind of just putting this on your plate and like, hey, you know, like this is what I'm seeing. This is what each time frame looks like. What do you think? Let me know. Do you think we're gonna, you know, kind of just go sideways? Do you think we're gonna, you know, kind of collapse below this and continue the downtrend? You know, I think it's a very, very interesting discussion. Like I said, I think a lot of this depends on the S&P 500, and it's unfortunately just not in a good place right now. So, you know, maybe this is the bottom, and we're gonna have a nice kind of Monday trading session here. But I just don't know if that's the case yet. I think that you know, the correction that this market needs to have is you know, it needs to have a bigger correction than this. It needs to have a more substantial correction than this, especially considering, you know, I mean, it's been, you know, without any price-based corrections, it's been trending up for like 3-4 months now. So 4 months. So, you know, going on 5 nearly, you know, without a real price-based correction. So that, you know, and at that, it's up by 21%. So 21% is definitely not small for the S&P 500. You know, so I think there's definitely an argument to be made that you know, we are actually going to be looking at you know, a bigger price-based correction here for the S&P 500. I know that I didn't show you my screen there. You were looking at my beautiful face instead, but this is basically just what I was showing you. You know, up by 21% within 140 days. You know, is a very, very clear sign that you know, I mean, that this index probably did get a little bit overextended here. The dollar, you know, kind of looks like it's losing a little bit of steam, so, you know, that might be good for us here, but I'm not gonna hold my breath for this either. You know, it very well could just be correcting before taking another leg up. You know, for me, the key level that I'm watching is probably going to be this prior high. As long as the dollar does not recover at this prior high and get above it, it's still bearish in my books. As long as this dollar is below this high at 104.7, then it's still bearish as far as I'm concerned. I mean, yes, it's having a beautiful big correction here, but, you know, it's not the first time that it did that within a downtrend, so, you know, that doesn't really count for much in and of itself. I honestly don't know how the dollar is still so strong. It makes absolutely no sense. The only thing I can point to is manipulation. It's super obvious that the whole world is moving away from the dollar on a very real scale, on a very large scale here. So, you know, how the dollar is still so strong, I don't know. You know, but I don't think it's gonna last, and so, you know, eventually I do think that this is going to potentially tick back in our favor. We're going to see things like gold explode and the S&P 500 and Bitcoin. So my outlook remains overall bullish, but certainly, yeah, a lot more cautious now than I was previously. You know, as we go in this market right now. You already know the deal. I've told you guys all about this on my previous videos in Telegram. I have tightened up my long position a little bit. I secured some more of my profits at 219% profit. I've already secured a lot of profits at ridiculous levels like 300%, so I'm super happy with that. My stop loss has been raised up to a minimum gain of 144% on the rest of my position, which means a minimum of 2.4x. 144% is a 2.4 times gain. So, you know, I mean, that is just absolutely phenomenal. I'm super happy with that. Like I said, I have made this trade on Bybit, and they were, it actually ends today. They were running a campaign where you might still be able to get it, where you get refunded up to $100 of losses if you make a new account right now, which you can use in your copy trading account. So that means you can just click a button and it will copy a trader that's on Bybit, which is pretty cool. So definitely do check that out. And, you know, here's another screenshot right here of all of those realized profits. And yeah, I've still got a little bit, you know, chilling, hanging out in this position right now. You know, which I could definitely close, but, you know, I mean, this is the bottom line. You can really see that I am putting my money where my mouth is here. You know, the bottom line is that, yeah, even though it's not gone perfectly, I just haven't been given good enough reasons to close my position yet, especially considering that my entry was in like the perfect place. I don't really need to close it. You know, I haven't really been invalidated, haven't lost a higher low. You know, we've still been punching in higher highs. Like, yeah, we've had a bit of a rough pullback, but, like, you know, we're in Bitcoin, for fuck's sakes. Like, that's what we expect. So, you know, I'm just not really that worried. The charts haven't given me a reason to be that worried, and, you know, my sentiment to you guys reflects that. My actual money, you know, is telling you the same thing as well. So, you know, that's what I'm looking at there. I mean, yes, 24.6 is my red line. You know, I've been in this position for like 4 or 5 months now, so it's probably the longest position. No, it is the longest active trading position I've ever held in my life. So, you know, I'm kind of just ready to get out of it, to be honest, and get back into the market with a brand new position. That's probably what I would prefer at this stage, especially considering all the corrections that we've been suffering and stuff like that. And at the same time, it was just a case of, well, you know, I didn't have a reason to close my position, so I didn't. You know, but below 24.6. You know, like I said, I've covered with you guys the possibility of a deviation, but, you know, you can't just be like, oh, we're definitely getting a deviation and then bank on that forever, because that would be dangerous and that would be stupid. And that's why, you know, that's why I didn't enter my long position on this leg down, but instead I entered it on this leg up. You know, I wanna join the winning train. You know, like I wanna jump on the train when it's winning. You know, I don't care if I miss the first 5-10%. But you know, like if it looks like it's going well, I wanna jump on. You know, basically that's kind of my approach here. So there you go, guys. I hope you have enjoyed this one. You know exactly what to do. Get your bonuses. Check out all the beautiful exchanges and their offers down below. Helps you out and helps the channel out as well. Thank you all very much for doing so. If you want to jump inside of VIP, these are the steps on the screen. All that good stuff. I really hope you have enjoyed this one. You know exactly what to do, and I'll see you all in the next one. Cheers.